Welcome to Trading Lounge and the US indices. We're looking at the SP 500 and the NASDAQ and Elliott Wave terms, and we've got two counts with this market. As you know, we've got this particular count here where we have wave 3 here, an A wave here, an A and a B and a C wave to make up the B wave here, and then we'll be looking for a move down here in wave C or 4. Either way, we're looking from wave 4 here. We've been counting 5 waves up through to here to complete, and that appears that that is completed now. So we're looking at the first 5 waves down here, and within that 5 waves we've got the first 5 wave structure coming down. So we're looking for the rally now and then coming down. But we also have our bullish count as well. So our bullish count is coming into, which chart's that on? This one here, one of them anyway. So this is the bullish count here, where we have wave 1 and 2 here, then wave 1 here and wave 2 here, and then wave 1 pulling back to wave 2 here, and then moving up from that point. Okay, so if we get support on the, just bear this number in mind here, this 2850, if we get support on that, like a tested support, then we need to be long from that point. The other way that this can be counted as well is that this here can also be counted as wave 1 here, and looking for an ABC to come back here as well. So just bear with me a second. So this would leave us, so we've got a bit of work to do here before we can set up for a short trade, and that's not the problem. And we know that the long trade can come into play. So if we just take this here, copy this 1, 2, 3. I haven't updated this little bit here. I've just been more focused on the top here with all this, and also the NASDAQ as well. But in this instance here, we can look at this one here. I don't think that's the case though, but this would be an A wave here, a B wave here, and a C wave coming down to this space here. But this does appear to be in 5 waves here, so it's likely that we can see this as 5 waves down, a move back to where it is now, and then a move down here. So we should be looking for short trade. I mean, obviously we're fighting the trend here, going short, but having 5 waves down here helps us set up a short trade to play down here. We can only go long on 2850. That would be the safe bet there at that particular point. So coming back, keeping this in mind, and coming back to the S&P here, we can look, this is the bearish count here. We'd look at this in this particular light here in terms of wave 1, wave 2 here, wave 3, wave 4, wave 5 here, and then an A and a B and a C wave here, and then coming back down through here again as well. So we do need to look for the short trade here. So yeah, just bear in mind that 2850, if I'm wrong, then we need to be long on that. And also too, in terms of talking long, if I can just go into the hourly chart, it'd be better to do this. So just sort of coming up with strategies here. So the move from the top down to the bottom here, and the 61.8% is here. Okay, the 50 and the 60 where it is. We'll look at this in a moment, but we would need to be long if the market moved up to this space here, the 2850. Yes, it would react from that space, but then it would push higher and then come back and have a bounce off that and here. So then we would have our long trade set up at this point. So that's where that would be the safe trade to go long at that point if that was breached by that by creating a high and then bringing our trigger down. That's how we would go long here. Okay, so that really satisfies anything on the long side. That's how we would handle it. Okay, on the short side, when we look at this here, it does appear to count down here as 5 waves, as 1 and 2 and 3 and 4 and 5 here. So we can look at this as wave 1. We can also look at this here too in terms of that corrective pattern that I was talking about as wave A here. So not that it bothers us too much at this particular stage, and wave B here. I'm just looking for just covering all the scenarios, right? And looking for the safest place for things. So we can go, you can go short under this low here. Also too, we could go short if you wanted to be a little safer. Everybody's doing different things, so we can go short there. When you've got a trend line like this, as you may know, you've got a trend line like this, same as going long through here. A market has to migrate from going from support, from resistance to support. It's the same with moving down as well. You'll see that bounce off there, come back down here, come back and check it, and then drop from that point. So it needs to migrate from one side to the other. So just bear that in mind. Also too, if you're going short right at the top here, and let's just say that it all works out fine for you, then we need to look at being short under the 30 and also under the 20 here as well. So 1, 2 and 3 here. So we want these as retested resistances. So when they first come down, they're going to bounce off these levels here. So the number 3 is going to get the biggest bounce. That can come all the way back to 4, so be mindful of that. This bounce here will be well, it can come back to 3, but yeah, anyway, yeah, accommodate that. So yeah, you want to be on the other side of it to add here. So it's got to lock under there, and then look to find a way under there. So it's really about locking under each level. Now this is group 1 here of 28 is a minor level, and these are sub levels. So normally what we find in a bear market is that, in a bearish trend, is that the number 2 here, once that becomes the retested resistance, and you can see that how important it is here, once that becomes the retested resistance, then the market or the psychology or the traders will start thinking of this number here. So then from number 2 here, it will be pulled down to the closest largest number here. There will be support here on this number here as well, and it'll be choppy all around this area here. This will be the other level that we'd be looking at here for the target area, which is group 2, which is 65, 72 and 80 here. So that would be a target zone. In fact, you could use this as your first target zone here at number 8. I'm just going to dive into the tick chart here, and we'll have a look at this area in this space here. So from the top here, we've got wave 1 and 2, and then all the way down for wave 3 here, wave 4 here, and wave 5 here. Okay, and then we're looking at the upside here. So we're looking at wave A here, wave B here, and then 5 waves up for wave C here of 1 and 2 and 3 and 4 and 5 here. So you can short under this level here and put the stop up here. You're fighting a trend to the upside, so it's much higher risk, but certainly taking out and looking at this particular level through here which brings us back down to this number here as such. So that helps us with adding to the short trade on that side of it there. Yeah, I mean, so the other thing here too is that I've got this here as an A wave here and a B wave here, which pans out on the NASDAQ quite nicely. But here, realistically, this could actually also be all the way down for the A wave here, up for a B wave and down for a C wave here and finish here. And these can be the first 5 waves to the upside here. So this move coming up through here, this move up through to here, with a 50-60% retracement level here would be back down to this space here. So as you can see, going short under the top of group 1 here, if this fails, then you'd be safe to do the short trade here. Because really, when I look at this here, if I look at in terms of the trading levels, well then this is actually the long trade here, because this market's played along here, but here moved up here and come back and got support here, so it would go down to this level, to this level, to this level here, in terms of trading and being long from this point here. Okay, so yeah, so in this case here, just keeping it really simple, that would be the long trade setup here. As such, but of course, I mean, if you were in there fighting this market or doing battle, then I would be bringing this down to this level here and above the 61.8% mark here and be on the long side from here. But that's all in hindsight, but it's good to talk about hindsight if you learn a little bit, So the other thing we're looking at here is being long on this level here. If this is where we know that we'd be wrong and we need to be long at that side. So the midpoint here, as it's called, so we've got, in terms of trading levels, we've got from the 28 here, we've got 1, 2, 3, 5, and then 8, the Fibonacci numbers, but we just add a little bit here, the 65 and the 72 here, to make up group 2. So 1, 2, and 3 is group 1, the midpoint, and then group 2 here. So support on the midpoint would be above the 61.8% level, and you'd be free to trade long from that point there. The NASDAQ here, we've got two counts for this, but the bullish count is more dominant, so I've stayed with that. So if I can just maybe bring in some more data here just to get the bigger picture here for this. So wave 3 here, an A and a B and a C wave here, and then a D and an E, so a triangle pattern for wave 4. It's also possible to have this wave 4 sitting under wave C here as well. That won't become apparent until we're much further up in the trend, if that's going to be the case. So it's also, just while we're here, it's possible to have this, if I just copy that, in the same as the SP 500 bearish count and have the B wave sitting up there. Okay, I don't think it's the case, but I mean, I've got to point these things out and so on. It's just the fact that it spent too much time. We could call this wave, this is the top of wave 3 here. We could look at this as an ABC for the A wave here, and then all the way up for the B wave here for an expanded flat, and then come back down here. But and it is still okay for a B wave to move up and expand a flat above this to 20% above it, but it's spent too much time up here. That's what sort of doesn't have the right look and feel about it. So yeah, so I'm more happy with the bull market here. If this situation here, what we've got wave 1 here, wave 2 here, wave 1 here, wave 2 here, and then we've got wave 1 here. Then we'll be looking for an A wave, a B wave, and a C wave back here for wave 2 here. So we're sort of expecting it back here. On the way up here, we expected a reaction from 500 here. Same with Fibonacci numbers as well. So using Fibonacci as a price ratio, and also it brings in a couple of other elements of, well, within that, the psychology as well of it all. It all just really helps bring it all together. So if this number here becomes the support, then we need to trade long again. And the support would be this little pattern here, so the arrival, the reaction. And if this just went straight up here and started creating this pattern here, well, that top there would be that top there, and that reaction would be this reaction. But in this case here, this may come down as an A and a B and a C wave down here before moving higher. And it also may be part of a bigger bearish picture, which will then come down further, and we'll need to look at that as well. But we can go short within this space here. We're not going to go long unless we start getting this pattern here. So we'd need to see another high above the level here first, and we need to allow that to actually just play out, really, and that will be in 5 waves, as they always are, and then it will just drop back and correct, and then we can start looking for our trade setups in that time. We're perfecting our timing and refining our timing within using this process here, which always works well for us and also keeps us safe as well. So with this in mind here, I could probably just cut straight through to the hourly chart and consider both counts, really. So so in this case here, the same as the S&P 500, if we consider this move down through here as the A wave, then we can look at this as an A and a B and a C wave in this case here for the B wave completed and the C wave moving down. And yes, I could put this in green here as well here, so I could have it as wave 1. I'll just leave it as wave 1 and have this one here as the A wave as well here. So there's a few ways it can be counted, but because we're assuming that this is 5 waves down here and this is a corrective pattern here, then we're looking to short this, and we'd be looking down at the 7,300, which would be the target here. Okay, and like I said, if this market moves up, yeah, you could trade it long above these highs here. In fact, we could just have this here, this red one here, and turn it into a green one here, and look to trade that long there. But you can trade that up to the 7,500 at that point. On the tick chart here, just I think I may have done some work in here. Just let me bring in some more data here, just so I know where I'm at. That's not helping much. Bring in more. Okay, yeah, much the same. So looking at all of this down here is the A wave, then an A wave, an A and a B and a C wave for the B wave, and then up for the C wave here. So it does appear that we've got our 5-wave structure here. So if we're going to go short, we need this. This can be the last. This can be the A wave, the B wave, and the C wave here, and up for the last structure here. So assuming this is 5 waves down here, then we can short from this low here and then keep the stop up here. But at the same time, we can go long above here as well. But it's not really that you want to go along there. You want to find. I can't draw on this side here, but you want to find the next high to come in. So you want the high to come in, because if this was 5 waves moving up here, then it's going to come back down again, isn't it? So it's going to have 5 waves up, 1, 2, 3, 4, 5 or something, and it's going to have an A and a B and a C, and then you use this high. But I can't draw on that side, on the tick chart. I can't draw on this side over here. But what I can do is I can put that across here, so it's away from that top here. So you need to find the next top here. Okay, once you got the next top there, then that becomes in there on that, and then you can go long from that point there. So trade the set. To me, the set in most cases, the setup is more important than the actual Elliott pattern that we're actually looking at here. Alrighty, I'm just going to keep it short and sweet like that. Yeah, so in the bigger picture for the SP 500 here, we just need to see if we're going to coming to the hourly chart here. We just need to see if we've actually got a top in play now. That's all. So just coming back to this point here, we've been working this week. We've been working down. We've been looking for the turn. And now we've got that first move down through here. This does appear to be corrective here as an A and a B and a C in both NASDAQ and here. So we're looking for the next move down through here. So we've talked about looking for the short trades. We know that we're trading against the trend, so you can use smaller positions. And if we're wrong and we need to trade with the trend, then we know that our levels to the upside where we need to go long from, because a move up through the 61.8% in this case and getting support on the 28.50 would create the long trades from that point. So yeah, that's about it really. So thanks for tuning in, much appreciated. Cheers.